Welcome back to my channel. Today, we're diving into one of the most classic and influential books on investing, The Intelligent Investor by Benjamin Graham. Considered a must-read for any serious investor, this book has been guiding investors for decades with its timeless wisdom. So, let's dive in and explore what makes this book so special. The Intelligent Investor by Benjamin Graham is considered a classic in the field of investing and provides timeless advice on value investing and sound investment principles. One of the core concepts in this book is the distinction between investing and speculation. Graham emphasizes the importance of investing in a way that minimizes risk and focuses on long-term value, rather than trying to time the market or chase short-term gains. Here are highlights from the book. Value investing. Graham introduces the concept of value investing, which involves buying stocks of companies that are undervalued compared to their intrinsic value. He emphasizes the importance of analyzing a company's financials, including its earnings, assets, and liabilities, to identify bargains in the stock market. Margin of safety. Graham stresses the concept of margin of safety, which involves buying stocks at a significant discount to their intrinsic value to protect against potential losses. He recommends investors focus on preserving capital and minimizing risks by investing in securities that offer a margin of safety. Mr. Market. Graham introduces the concept of Mr. Market, a fictional character representing the stock market that is often irrational and emotional. He advises investors to take advantage of Mr. Market's mood swings by buying when prices are low and selling when prices are high, rather than succumbing to market fluctuations. Long-term investing. Graham advocates for a long-term investment approach, emphasizing the importance of patience and discipline. He cautions against speculation and market timing, and instead encourages investors to adopt a buy-and-hold strategy with a focus on the fundamental value of investments. Diversification. Graham emphasizes the importance of diversification in building a resilient investment portfolio. He recommends spreading investments across different asset classes, industries, and geographies to reduce risks and increase the chances of overall portfolio success. Bonds and fixed income. Graham provides insights into the world of bonds and fixed income investments, including their risks, benefits, and how to analyze and select them as part of a diversified investment portfolio. Investor behavior. Graham delves into the psychology of investing and the importance of understanding one's own behavior and emotions when making investment decisions. He cautions against herd mentality, emotional decision-making, and the pitfalls of market speculation. Margin trading and speculation. Graham warns against the dangers of margin trading and speculation, emphasizing the risks associated with borrowing money to invest or engaging in speculative activities without proper analysis and understanding. Investment fundamentals. Graham provides a comprehensive overview of various investment fundamentals, including financial statements, valuation techniques, and investment analysis tools that investors can use to make informed decisions. Contrarian investing. Graham encourages contrarian investing, which involves going against the crowd and taking advantage of market inefficiencies. He advises investors to be disciplined and patient, and to base investment decisions on sound analysis rather than market trends or short-term speculation. Overall, The Intelligent Investor by Benjamin Graham emphasizes the importance of a disciplined, long-term, value-oriented investment approach, and provides practical advice on how to navigate the stock market with a focus on risk management and preserving capital. It is widely regarded as a must-read for anyone interested in value investing and building a successful investment portfolio.